We are keeping an eye on shares of Martinrea today. The Canadian auto parts maker did provide a second quarter or current quarter update in terms of their business. Joining us right now is the chairman, Rob Wildeboer. Rob, good to be able to catch up with you. Thanks so much for your time.
Nice to be here. Nice to hear from you again.
Thank you. Let me first ask you to provide your commentary, your message to investors today. There were a few interesting aspects to it.
Sure. I think it's a pretty positive message. We declared a dividend, which this year's dividend is larger than last year's dividend. It shows our confidence in the future, and we think that shareholders should be rewarded. We waited closer to the end of the quarter because, of course, in the first part of the quarter, we weren't making any revenues. We weren't making parts, but we are now, and things are going pretty well. The second thing is we had a pretty unique deal with our lending syndicate to basically disregard the second quarter. We think it's a unique quarter. We think it's almost a tsunami in the nature of the auto industry, which gives us a lot of enhanced flexibility going forward, because we think coming out of this quarter, there's going to be opportunities. There's going to be opportunities to win new work for takeover business and so forth. And we want to make sure that we have enough financial flexibility to do that. And then what we really wanted to do, and our CEO, Pat Duramo, talked about it in the press release, is to show we have not been idle in the downturn. We have spent a lot of time continuing to streamline operations, and we think we'll come out of it leaner and better than ever before.
Rob, I want to pick up on what you suggested is unique, which it probably is, having an amended lending position with your syndicate, basically suggesting that the covenants are wiping out anything that happened in the second quarter, ignoring all of the Q2. What was it like organizing that or negotiating that, and how rare is it, or is it happening and we just don't know a lot about it?
Well, one of our principles is think differently, and typically what happens in these types of things, as you know, and I know you've got a deep financial background, is people look at funded debt to EBITDA ratios, and ours was 3. We were going to be fine under the covenant. But the problem is when EBITDA disappears for a quarter, then that gives you less flexibility going forward. And the way they calculate the debt to EBITDA ratios, they tend to lag. So if you have a bad quarter, it continues on for the next quarter, the next quarter, and the next quarter in terms of calculation, even though those quarters might be perfectly fine and very good. And so we had a discussion and say, look, this really is kind of a one-off. The best thing to do for flexibility is let's disregard it. Let's have a discussion. A number of people said, this is fairly rare, or some people had seen it. Most people, it was not their traditional way of approaching it. But we like to think differently. And our CFO spent some time with them and showed them the numbers and all that type of stuff. And we figured it was a pretty good way to go forward. And, you never let a good crisis go to waste, but you should always be thinking differently and trying to look for the best solution coming out, as opposed to just doing, the traditional approach.
Yeah, no, it seems like an incredible way to go about this. Because to your point, the whole idea is you've got a great, strong, long business, and you want to make sure you've got the financial flexibility to go out and make other business opportunities happen, which you did briefly mention. So when you talk about that and opportunities takeover, you used the word takeover, but what are you thinking? What are you seeing out there right now?
Well, I think as in any crisis, there are some people that are pretty strong, but some people that are going to be stressed. And one of the things we've always said to our customers, and we think it's important, is it benefits you to have a strong supplier, a flexible supplier, one with financial strength that can work with you. And the last thing you need to do is be worrying about the solvency or the stress of your supplier. And in our industry, we're seeing a number of OEMs basically improving payment terms to suppliers and that type of thing in order to ensure that they can come up and provide parts. And if you've got 300 suppliers and 2 can't provide parts, you're not making a vehicle. So in that sense, I think the strength is important. And in terms of the opportunities, there are opportunities to quote work. We want to be able to have the flexibility to invest in the machines and equipment that we need to on an advanced basis. There may be some takeover work in the sense that some suppliers may not be able to do some stuff. Sometimes you see that happen. It's open to the OEMs to move work around or to grant new work to new suppliers. We want to be a recipient and beneficiary of that. And I think that there are some companies that are stressed, and I think you'll see some consolidation. You may see some soft insolvencies. You may see some Chapter 11s coming over the next 6 months, and we want to be there to be able to help our customers and take advantage.
And Rob, we know that you're restarting, have been restarting in the United States as well as Europe, and also, of course, China appears to be normal production levels right now. But you also said in the press release that that's based on customer orders. So what are customer orders looking like right now? Actually,
quite good. So the customers, ultimately, they have to be able to sell their cars to the consumer, and so you ultimately look at consumer demand. But in May in the United States, for example, it was over 12 million vehicles with half the country shut down, which actually was I was astonished actually that it was that high. Customer demand seems to be relatively solid, especially for things like pickup trucks and SUVs as people go back to work or as they drive more rather than fly and take subways and that type of thing. But the production levels have been pretty good. So our restart in North America was really mid-May-ish, and the first week was not so good, and the second week was better than the first. And where we are now is we're seeing a number of customer plants that are basically at full production. And I think that in July, we may see the typical July shutdown actually cut back by a number of suppliers or a number of customers and a number of plants, so that we'll actually maybe have a pretty decent July compared to what we normally do, because we normally shut down for half the month.
And do you have confidence, though, when you take a look at the economy and the reopening of various economies around the world, that the consumer will be strong enough to continue to purchase cars? I understand that used car demand is up significantly, but we're still in the early phases of all of this. What's your view for the remainder of the year in terms of the strength of the consumer in the various countries and economies?
Well, I think the second half of the year will be better than the first half. I think that there is a general view out there from the IHSs and the Goldman Sachs of the world and so forth that it won't be as good as the last 6 months of last year. So we take that may be true. We'll see how things ramp up, and we'll see how confidence comes back. Next year will certainly be better than this year overall, and I think the following year will be better than that. But ultimately, the importance of having a strong economy and when that economy gets strong and how fast will ultimately have some impacts on demand on an overall sense. The other thing that gives me a certain amount of I'd say optimism as much as anything else are some of the trend lines. I think that with people working remotely more, they don't have to go into the city as much. I think you're going to see some people move out more to the suburbs. Those people are going to need vehicles. I think people are going to travel on airlines for holidays less, but it's easier to get in a vehicle and go to cottage country. And I think you can control your environment from a safety perspective. So I think that's there's going to be some very interesting trends come out of this as people deal with COVID. And I think the reality is that the economies are opening up. I don't think we're going to shut down again. I think people are recognizing that the mortality rates of this disease are benign if you're under 70 and healthy. And we have to focus on our vulnerable people. But the reality is that we're opening up, and I think that's a good thing.
And just lastly, to pick up exactly on that point, Rob, I believe you have been vocal in saying that we've flattened the COVID curve, but we've also been flattening the economy. So that was June 3rd, I believe you said that. What's the view today in terms of the messaging to perhaps our leaders?
Well, I've been saying that since March. I've been saying the mortality rate as put forward by the WHO at 3.4%, bordered on criminal negligence, because the mortality rate is significantly less than that. I can understand effectively doing a certain amount of lockdown and shutdown to try and ensure that you can deal with the surge in your hospital system and so forth. And we've been part of, hopefully, the solution for that. You know, we're making masks and we're making ventilator stands, and we've been very supportive of our governments provincially and federally and in all jurisdictions everywhere when it comes to that. But, you know, as a good general going in, you have to understand the exit strategy. And once you flatten that curve, you've got to get back to work, because the issues of not running an economy are not just economic. It's not health versus economics. If you're shutting down your economy, you're creating huge health impacts. You're creating situations where the mortality rates in other areas go up. You create a certain amount of stress, which itself is a problem. And you deal with freedom issues where lockdowns, quite frankly, aren't good for people either, and you get bad results. So I think things are coming along pretty well in Ontario. I think that they're coming along better. I think that in a lot of places in the United States they're coming along, and I think people are recognizing, even in places like Texas, which have a lot more cases, they're recognizing that the mortality rates are down. But let's make sure that the hospital system is ready in case you have infections. But we're going to have to live with this, as we have with every pandemic in history.
Understood. Rob, great to be able to catch up with you and speak with you. Thank you so much for your views and insights.
All right, thank you. Have a great day.
Thanks, you too. That is the Executive Chairman of Martinrea, Rob Wildeboer.